Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining space. Joining me today is Christopher Ecclestone, Principal and Mining Strategist at Hallgarten Company. Chris, welcome back to Kitco.
Hi there.
Now, the big news this week was the fall in the gold price. It lost more than $400 per ounce as we sit here today. Chris, this is something you forecast in a note that you put out at the start of October. You said the precious metals markets are looking very toppy and a pullback of $1,000 per ounce in gold and $10 to $12 per ounce in silver is becoming more likely. So Chris, or should I say Dr. Doom, what are the causes or the reasons for this pullback?
What goes up must come down. Eventually everything corrects in some way or another. I cannot believe it. I've been to events in London recently that are full of veteran investors, and I mean veteran. And they must have seen 5 major bull runs in precious metals and then 5 major retreats for precious metals. And yet at these events, one meets these companies from the precious metal sector who give this rah, it's going to 10,000, etc., etc. And there's not a squeak from the audience. I don't know if they're then all leaving the room and shorting the stock because they've seen it all before, they've heard it all before, or they're believing it. There's a great power of self-deception and self-delusion that comes from the feeling of being right, that if you wait long enough, gold will go up, and gold will go up. I mean, the trend over millennia is that gold will go up. But the thing is, really, is it going to be, is it going to last? Is it going to be a never-ending advance, or are there going to be some step backs in the process? And as we've seen in recent days, that has taken place. Now, what has caused it is a bit more intriguing. I speculated in my note that the retreat might come about because of an outbreak of peace, because I perceive a lot of the gold and silver price being linked to more international insecurity. We have 2 major military events going on at the moment, and one of them seemed, though maybe it's not the case, to have had some sort of resolution in the last 2 weeks. The other one, the Ukraine war, cannot last forever. I mean, we've heard that about wars before, that they'll be over by Christmas and blah, blah, blah. But there's a lot of fatigue in that war. There's a lot of equivocation about who's supporting who and how deep that support goes. I just don't see that thing going on over another year because it will have some sort of resolution. When you've got that resolution, then potentially you've got not much in the way of wars going on, unless one wants to go to South Sudan or something like that. That takes a certain element away. Then we've also got the Trump factor. I think it's a very long time since we've had a US president as a permanent mover of the gold price or of precious metal prices, and uncertainty about the actions of a president. I mean, I suppose the one that's had the most effect in living memory is Richard Nixon. But in this case, I think there's a lot of doubts about the fundamentals of the US economy. And certainly a lot of chickens are coming home to roost there. And it may not be that Trump caused these chickens to roost, but he certainly let them loose. And, a lot of questions are now being asked about how good the US economy is in the long term. I'm not talking about just the short term, the long term. Is there a sunset moment appearing for the US economy, as there was post-World War II for the British economy, which really never had its glory days again, and in fact did lose the pound as being the international currency. So, there are threats to the dominance of the dollar. And I think it's not a case of the dollar being replaced by the yuan. It's more a case of its primacy being eroded and having to be shared with a more multilateral currency scheme, which once you remove the dollar, of course, you remember that the gold price is denominated in dollars. I mean, you could denominate in whatever you want, bolivares, if you like. But, the reference point is the dollar. And if the dollar is looking sick as a parrot, then the gold price has to compensate for that by outperforming. But only as long as that continues to be a source of distress for the market. And we don't know at the moment, how long the irregularities in Washington will continue.
Okay, there's a lot to unpack there, Chris. You touched on a lot of points. Wars, the participants in wars often run out of money, which is one of the causes for wars to end. And with Russia-Ukraine, there's a lot of concerns over who is going to continue to finance Ukraine's resistance. Don't know the answer to that, but that's one of the things that's front and center of mind of a lot of leaders. But that could potentially be replaced by another war as the US relationship or entente with Venezuela seems to be heating up. It's interesting you mentioned gold being priced potentially in bolivares. The US is increasing its military presence in the Caribbean Sea. There's a lot of talk in the press here in Colombia, where I'm based, and in the region about, is the US looking to overthrow the regime in Venezuela? It tried to do so sort of 20 odd years ago when Chavez was president. Venezuela obviously sits on one of the largest reserves of oil in the world, and it has a lot of gold. What do you see going on there?
I don't think it'll be a Ukraine type situation. The Venezuelans will fold very quickly in such a situation because unlike the Ukraine, I mean, there is a large group, maybe even a majority of the Venezuelan population, which would like to see Maduro gone. So certainly they're not going to be joined in the trenches in any sort of resistance against regime change in Venezuela. And I think some of the neighbors around about would not mind seeing regime change as well. Usually Latin American countries have shown some sort of solidarity in these sort of Monroe Doctrine type adventures that Washington engages in. But in this case, there's been a lot of backwash over decades into neighboring economies, whether they're Guyana, Ecuador, Colombia, and they're tired of it. There's no sign of an end, and it's dragging down their own economy. The development of real economic grouping in Northern South America is sort of blocked by the fact that Venezuela is such a basket case. But the potential growth outcomes of Venezuela being set free from its shackles are enormous, absolutely enormous. But the US should watch out what it wishes for, because, of course, Venezuela returning to peak oil production and things like that would actually sink the oil price.
Absolutely. Now, you suggested that the gold faces a potential correction of $1,000 per ounce. We've had a 10% correction so far. $1,000 would be, let's say, a 20-25% correction. So potentially there's more to come. Market corrections, as you noted, are part of a healthy long-term upwards market move. So are we going to see a further correction, or the correction deepen? And then are we going to see perhaps a bungee moment with prices starting to take off again once it has done further correction?
I think that, when you get a sort of a decent correction like this one, it sort of pricks the bubble of, the illusion that things are going to go forever to the skies. I mean, we've seen this in lithium, where, all these merchants of EV growth stories had these lines heading, they were very much straight lines, or they were hyperbolic lines heading to the skies. And as soon as the prices fell and the demand fell, those charts all had to be retired, not just because they were wrong, but because they ruined the hyperbolic nature of the dream. And so in the case of gold, if it's destined to go to the moon, I don't see why it would really, recapture the vibe that we had 2 or 3 weeks ago, which was almost a frenzy, particularly in the silver space, more than anywhere. The stories coming out of India are just amazing, because I never thought that the Indians would get an attraction for silver like they have. But then again, remember that silver is the poor man's gold. And I get the impression that the Indians are speculating in silver, whereas gold is the asset that they keep, which means that if they make a decent turn on the silver, they will dispose of it back into the market, which ultimately puts a bit of a lid. Now, I'm a big silver bull, and I think that over the long term, we should see a big improvement in the gold-silver ratio, which historically over hundreds of years was like 15 to 1. And it's still somewhere over 60 to 1. And it has been in the last year over 100 to 1. So it's a long way for silver to go, or for gold to go down. And that's one other way of correcting the ratio until silver gets back to somewhere like that long-term historical ratio. Silver, of course, has an industrial driver behind it, which gold does not. Gold is just sort of like out there. I know a lot of people who think that the gold price is really being underpinned by the crypto aspect, and particularly when you see funds like Tether. Tether have done a few deals in the gold mining space, in the gold royalty space in particular. They are looking to sort of backfill what is an essentially unsupported currency structure by filling it up with a cement of gold stocks and gold holdings and US treasuries. It's quite ironic that people are piling into crypto because they don't like US treasuries, and then some of these crypto structures are buying short-term treasuries to underpin the value of their sort of pseudo currencies, which sort of defeats the purpose.
Well, I think that's testimony to the fact that people don't read the small print about what they're perhaps buying. We're going to talk a little bit more about lithium in just a moment, Chris. The lithium price has come off 75% from its highs. No indication that gold's going to do anything like that. Silver's off about $5 per ounce from its highs, and there might be some more drama to come because there's a US Federal Reserve meeting coming next week. Chris, what do you expect? What can we expect to see from that?
Trump is putting a lot of pressure on them to change the guard and move to a more sort of growth-oriented stance. And his definition of growth-oriented is low interest rates. I mean, low interest rates have got us a lot of the problems that we've got at the moment. And inflation is a genie that got out of the box several years ago, or during the pandemic, basically, and has not been put back in its box since then. Despite higher interest rates. I mean, these are not high interest rates by any means. For anyone who remembers the 80s with 15% interest rates, interest rates of 4%, 5% are nothing. And the basic savers are getting scarcely any better price for their deposits than they were getting when the interest rates were scraping along the bottom. So it's really all gone into banks' margins at the moment. So just changing the guard at the Fed to a whole lot of loose money people, I think that's a fallacy, and I think it just goes to prove that that Trump has not much in the way of an economic clue, and his team is very sort of hedgy oriented. For many years, we've had secretaries of the Treasury and heads of the Fed that were all sort of ex-Goldman. So more on the sell side. Now we've got a whole lot of buy side people infesting the Trump cabinet, like Scott Bessent and Howard Lutnick, and you really wonder what is their attitude. They like to see markets booming, but markets can only boom so long, and then the rug gets pulled, as we saw in 1987, and then we saw in 2008. Does Trump really want to have a crash on his books? It would be better to actually sort of let the market down gently, or just have a sort of like a more normal type of stock market, if such a thing exists, than having overheated situations. But I think he's a bit desperate now to have a lot more growth in the US economy to make up for the damage that's been done by the tariffs and the uncertainty and the flip-flops and all that's been going on. And I'm not sure that low interest rates actually managed to patch the holes in that leaky ship.
Okay, well, Trump's a real estate developer, and low interest rates are one thing real estate people yearn for. Let's stick with Latin American politics. Argentina's President Javier Milei faces strong headwinds in midterm elections this coming Sunday on the 26th of October, as signs that his economic miracle may be starting to emerge. He still has the support of US President Donald Trump, who agreed a $20 billion currency swap to support the Argentine peso. However, opposition is mounting. My enjoyment of the NFL Red Zone last Sunday on ESPN was repeatedly interrupted by party political broadcasts from Argentina. And my takeaway from watching those, or having to watch those, is that the sole policy or selling point of every candidate to the left of Milei is just to get him out of office. Nothing more, nothing less. Chris, you're on the ground in Argentina. What is the sentiment there? How worried should Milei be for these upcoming elections?
Well, one thing I've been noting in my conversations lately about this is that Milei has been a great success in getting the budget under control. And Argentina hasn't had the budget under control forever. Well, maybe not since the 1920s. It's never cut its coat to suit its cloth. It's decided that it wants more coats, and it's just going to make them, even if they don't have enough to do it. And his actions in the very first few sort of honeymoon months of the regime, in basically getting rid of a lot of government employees and in scrapping all the infrastructure projects that were going on at the time, have got his budget into great shape. And he, unfortunately, is not a great politician. So he's not pointing out the strong point, which is that. Now, inflation is actually quite low compared to what it was before, which is a bit of a satisfaction. Some prices I've noted have gone down. When I left here in April and I returned last week, in April, I would have said that a cup of coffee here cost more than it cost in London. Now, because of the move from $1,200 to the dollar to $1,400 to the dollar, a cup of coffee is now cheaper than in London. So a few sort of like fleeting improvements there. But the basic thing is that the cost of living has got so high that the Argentines are on a consumer strike. The restaurants are pretty empty. The shopping malls, you could fire a cannon and not hit anyone. The shops still have outrageous things like $50 T-shirts, plain white T-shirts of $50, and the customers aren't buying them. Because if they're people who've got the money, the upper middle class and above, they go to Miami and shop. So there's a big, sort of lack of consumer response. Not because they don't want to. Argentines love spending, but because they don't have the money. You just look at it and you wonder how people make ends meet here with the salaries being what they are, because they aren't enormous. And the prices, which are sort of like, I use the word first world prices, but certainly groceries are a lot cheaper in the UK than they are in Argentina. And Argentina used to be like a breadbasket to the world. It's quite dramatic. But having said that, the weak point of Milei is the dollar. And that is weak, primarily because the people that Millet mistakenly thinks he is advancing the cause of, which isn't the working class and isn't the middle class who elected him, but it's some sort of elusive upper 5%, they are exactly the people who have taken the most advantage of Millet's liberation of the exchange rate and have been fleeing with their pesos converted into dollars and salted away in their Swiss bank accounts. And they're the ones who've been undermining the regime. So Millet has to work out who his friends are and who his enemies are. And certainly post-election, whatever the result is, and I don't expect anything more than like 35% of the vote for his grouping and possibly, 30%, he is going to have to pull a big rabbit out of the hat. And it's interesting to note that while it's 2 years since he got elected, the dollarization, which was one of the key tenets of his original election, has scarcely been heard about ever again. It was mentioned a bit in the first year. It's totally disappeared over the last year. That is something that, despite me not being enormously enthusiastic about it, I think he will have to dust off, because otherwise it's really, he's got the economic house in order, so the dollar should have fixed itself, and it hasn't because of this speculation, constant speculation. The dollarization would kill the speculation for good and basically bring the benefits that only really the top 5% are getting down to the rest of the population, because their dollar earned would be $1 instead of being 1,420 pesos. Whereas where the 5% are earning their money in dollars.
Okay, well, let's bring this conversation towards the mining sector, which is obviously our purpose here. If the left has a big resurgence in these elections, what does that mean for Millet and his economic reforms? And more importantly, what does that mean for the mining sector, whose growth he is trying so hard to promote?
Look, one of the problems here is that Millet was elected with 56% in a runoff between him and the Peronistas. And basically, that was 44% of the population supporting somebody else. He has sort of seen that as maybe what he would get in an election for the deputies in the Congress. And that's not going to happen. It never was going to happen. So by putting 51%, basically a majority in the Congress as some sort of goal, was a big mistake. Because he getting, we've got to remember that when Millet himself was a deputy, he only had 3 or 4 deputies in the whole Congress that were libertarians. And he might come out of this election next week with 60, 70, 80. Is that a bad situation for the libertarian front? If they're going from 4 to 70? No. But he's actually created a mistaken dialogue that he needed to have half the deputies to be a success. And in fact, certainly, it is a numbers game, but he's proven himself to be very poor in dealing with, the type of log rolling and negotiating that needs to take place in the Congress to get legislation passed. He thought that it was all stick and no carrot. And unfortunately, you've got to use the carrots. You've got to have a lot of carrots to feed the deputies in Argentine Congress.
And unfortunately, the cost of living for carrots has gone up, as you said earlier.
Yeah,
okay.
No, exactly.
Entities eyeing those developments closely will likely include Appian Capital Advisory, which has launched a $1 billion critical minerals, metals and mining fund for emerging markets in partnership with the World Bank Group's International Finance Corporation. Investment decisions will be made by Appian with the IFC to fund alongside Appian's funds. The idea is to bring together Appian's technical, operational, and financial expertise with the ESG rigor of the IFC. Appian founder and chief executive Michael Sherb told me earlier this week that this will enable Appian to have additional financial firepower to invest in more projects in its sweet spot, which is around the $500 million investment range. Chris, what do you make of the IFC teaming up with private capital in this way?
Yeah, it's a little too late methinks. $500 million you do not need to put into the projects in most of the critical metals that are out there. And we already have a situation. There are way too many lithium projects around. There are way too many rare earth projects around. There's sort of a bit of a shortage of tungsten projects, but the tungsten projects shouldn't be $500 million projects, because if we get 3 or 4 $500 million projects, we have too much tungsten. And we have too much of this and too much of that, and then you have a disaster. I see many faults in the market. The mere fact that we've got massive excess of rare earth names out there is a market that has learned nothing from the previous rare earth boom of 13 years ago, because we're repeating it again. But back in those days, they were all explorers and promoters. These days, they're all talking about being in production, but we don't need that much stuff. It's going to be crazy. There's going to be rare earths coming out of your ears, and all funded by some sorts of government subsidies, as we've already seen with, the US government with MP Materials, and the Australian government fluttering around Arafura, which I feel is the most unworthy project. We've got, and whereas, they're backing Brontosauri when I prefer to be backing the velociraptors of the rare earth sector. Because these big woolly mammoths, are destined for the graveyard of history, the tar pits of La Brea, which is where they're going to end up.
It is reminiscent of a couple of years ago, the boom in lithium exploration. There are more than 100 companies exploring for lithium. Now, they've obviously, a lot of those have been culled and killed off by the price fall. It's now rare earths term. And added to that, you've got, oil companies are looking at producing rare earths. Lithium companies are looking at producing rare earths. Copper or base metals companies are looking at their deposits as well. So you're right. I think there is a flood, or potentially far too much, looking to come to market. Now, another critical mineral, of course, is copper. And this week, Arizona Sonoran Copper announced a pre-feasibility study for its Cactus project in Arizona for an open pit and heap leach SXEW operation to produce 99,000 tons per year of copper cathode for 22 years at a C1 cash cost of about $1.34 per pound. Initial capex there is about $977 million US, giving it a capital intensity at a relatively attractive $11,000 per ton. The project would yield an after-tax next present value of about $2.3 billion at an 8% discount rate, an IRR of 22.8%, and a 5.3-year payback at a base case copper price of $4.25 per pound. Chris, the numbers look very attractive, and Arizona Sonoran certainly seems to be in the right time and the right place to develop a copper project.
Yeah, definitely the right place. I think that there's been a pivot under Trump. He's brought mining in the US, the continental US, in from the cold. And the Democrats are going to have a lot of trouble if they ever get back into power, telling the American public that mining doesn't matter. It's not going to work. So if Trump has any legacy, besides the ballroom, it's going to be a mining industry that sort of like works, because the US used to be massively self-reliant and self-sufficient in these type of metals, and that was all let slip away with this attitude that we can shunt that off to the global south, and those people can deal with it. But when the reality comes to it, for the voters in the east and west coast, if there's a big pit in Arizona, it's not in their backyard. So if it's not in their backyard, what do they care? So I mean. Yeah, let's go for it. The US needs these type of projects because, other things like Bingham Canyon, which has been going since, I think, 1917, don't last forever. And the US hasn't been really replacing the once great mining legacy that it had. It's let it definitely slip away. And, you can have gold in Nevada and things like that, but, that doesn't really aid the US economy or the US industrial base. It's really having copper, zinc, etc. that will rebalance the US economy towards some form of vertical integration, reducing the trade deficit, if nothing more.
Absolutely. The United States industrial strength was built on copper, oil, copper, aluminium, iron ore, more than a century ago. Now, Chris, in the your note that I referred to a while ago, and you referred to this again a few moments ago in your comments, you've criticised what you call a scattergun approach by the Trump administration to funding critical minerals projects. Arizona Sonora sounds like ones that it certainly should support because it's going to produce copper cathode. It's within a line of sight of being able to develop and start that process. Why do you think that Trump is spraying the funds around so broadly and to projects that are at various different stages of development, including very early stage projects?
They're picking champions, but they're not people who are good at picking champions. Certainly not in the mining space. I'm going to exonerate them here because there are a lot of mining investors who've made lots of bad mistakes in backing horses that have dropped dead as soon as the starting gun it just goes off. And we've got to point here to Molycorp, which was the predecessor of MP Materials with exactly the same mine that only lasted 2 or 3 years in the public markets before it dropped dead, and then had to be sort of resuscitated in this new format. So how much do the backroom boys of the Trump White House know about rare earths? And I think from some of the utterances that we see, let's not just blame Trump. Let's look at Australia. Let's look at Canada. Let's look at the EU, backing things that, frankly, the backers, the decision makers, do not know the difference between the good, the bad, and the indifferent. And they're not looking towards a bigger strategy, which is to create a sort of like an ecosystem. Just backing MP Materials means you're backing a rare earth company that is almost entirely weighted towards light rare earths. What about heavy rare earths? I noticed, though, that the statement that came out yesterday between the US government and Australia on sharing work on critical metals had heavy and light rare earths rather than light and heavy rare earths. Because, of course, light rare earths very much associated in the mind with the EV industry. And heavy rare earths have a sort of a more, some of them go to the EV industry, terbium, dysprosium, but terbium has lots of uses in it. It makes your cell phone vibrate. And erbium is in all 5G networks as part of erbium dope fibers. And gadolinium has medical applications. So there's now sort of a realization that heavy rare earths are important, but backing MP Materials addresses that in no way whatsoever. So how do you deal with that? And it just shows that they threw money actually at a project that was already going ahead and could have funded itself. They really just juiced up a project that didn't need juicing up.
Well, I suppose that enables the Trump administration to claim a win if the project is going to go ahead into production anyway. Another aspect,
it was selling its product to China. That's the irony of it.
Okay, ever the businessman, Trump has started to seek equity stakes in projects the government funds. You talk about MP Minerals, it's got an equity stake in that. Thacker Pass, Lithium Americas is getting an equity stake both at the corporate level and at the project level. At face value, it would seem reasonable for the government to want to share in the upside, the share price upside it creates by helping to advance and de-risk projects through equity, as any other investor would expect to. But what are your concerns about the US government taking equity, direct equity, in projects and companies?
Well, they're not doing it in isolation because you've got these other governments who are also backing, horses. They're backing their own horses in the race. And so you have a potential situation where the government may actually lose money. I think almost certainly the governments will lose money because they're backing excessively high guaranteed prices in the case of MP materials that the US defense establishment is going to pay for rare earths coming out of MP. That is highly distortive, not just for the budgets of the military, but for the whole of the rare earth industry. Creates a very uneven playing field because it means that there's one party that's getting massively subsidized and all the rest are just gasping for air. Personally, after that deal, I wouldn't back any of the other rare earth companies unless they were really, really niche. They were heavily weighted to heavy rare earths, something like that, because backing these companies that are going to be Godzillas, and as we know from Godzilla movies, Godzilla crushes all around as it advances, and friend or foe. And so other rare earth projects in the US, are they going to get some of the largesse, or is Washington going to say, well, we've already given?
Okay, another sort of twist on this, Chris. The US government seeking participation in projects. Is that really any different from countries such as Mali, Papua New Guinea, Tanzania, Pakistan, etc., having project participation or seeking project participation as part of their giving their approval to Western companies to develop projects in their nations?
No. But they're not actually demanding it. It's not legislated that you've got to have a 10% free carry or 20% free carry, or like in South Africa, I think it's 26% BEE participation. But who knows? That may be next. But I don't really see the Trump administration going in for BEE sort of component in its funding of anything.
Okay, well, let's get back to lithium. PMET Resources announced the lithium-only feasibility study on the CV5 pegmatite at its Shakchuan property in the James Bay region of Quebec this week, as it seeks to make an environmental and social impact assessment submission. The study details 5.1 million tonnes per year of ore processing to produce up to 800,000 tonnes per year of 5.5% spodumene concentrate at about $800 per tonne all-in sustaining cost for 20 years, which would make it the fourth largest spodumene concentrate producer globally. Chris, the lithium price seems to have lifted from its bottom, but is the world ready for another large lithium development project yet?
No. Spodumene is pretty much doomed. We saw the elections in Bolivia last week, which potentially bring the Salado Uyuni, which has long been in the freezer, which is the world's largest salar, lithium salar, out into potentially Western investability. Let's put it that way. So who needs James Bay? Certainly not me. And certainly not anybody else in the lithium industry. I mean, it's totally excess to requirements. I don't know. And, you mentioned 5.5% concentrate. Most people are doing 6% concentrate. So something's missing there. That's 10% under the average.
Okay, well, let's broaden this out again to sort of the wider lithium space. As we've mentioned earlier during this conversation, the lithium price collapsed 75%. It's now about $10,000 per ton of LCE, lithium carbonate equivalent. But a lot of the EV and lithium-ion battery infrastructure that was being planned in North America is starting to be put on pause or wound back. EV vehicle sales are not growing quickly in the US. The US government did not continue with a $7,500 EV subsidy, and consequently US automakers are reappraising their needs. For example, General Motors suspended the second phase of a battery cathode plant development in Quebec recently. What's going on here? I mean, lithium's a relatively low volume market, and bringing on a new project such as the one that PMET has, that's going to completely distort the market and perhaps send prices crashing down again. It seems to be a very treacherous market setup.
Oh, it is. I'm not worried about PMET because it's not going to happen. But there are a lot of solar developments coming along, which are going to be category killers. They're going to dispense with a lot of underground spodumene producers. Quebec again. It's not good. It's not good. And the salars are so cheap to produce. No one needs hard rock lithium. And as you say, the demand is sort of sloppy. The global south, which is an enormous part of the auto consuming public, have little to no interest. Their governments are giving no subsidies for taking up EVs. Why should they? I mean, many of these countries don't even have auto industries. Chile's a good example. Why should Chile be encouraging that, except maybe as a way of avoiding petrol imports? But, the Global South is not interested in EVs to any great extent. So that's not happening. The US is weak demand. And at a far higher level, and this is something I've been saying for years now, basically the working class and lower income groups that can afford a car at the moment will not be able to afford EVs unless their markets are swamped with cheap Indian and Chinese models. And if anything, the politicians in the EU are vigorously and viciously resisting an onslaught of cheap EVs. They want everybody to have some sort of German-made EV. But when the reality comes down to it, if you have German-made EVs, the working class won't be able to afford them. They'll be all on the bus because they will be de-carred, de-autoed, or whatever the word is, and removed from the potential audience for these cars. We're already seeing in the UK. I mean, it's very difficult to afford the price of a new EV. I mean, EVs only have like 8-year lives, or their batteries do, and the battery is the crucial part. So what is a second-hand EV that's 4 years old? It's only got 4 years left. Only got 4 years left. So, I mean, who wants to buy a second-hand car that's got such a short shelf life? And that's the only way that people can sort of get the trickle-down effect of, the cheap second-hand car. But, an ICE can last 20 years or more and, have multiple owners over that period. Whereas an EV is basically after 8 years, it's off to the scrap heap.
Cool. Well, thank you, Chris, for helping brighten your day for all the North American EV and lithium space. It's been a fascinating conversation, Chris. Thank you very much for joining me today.
Thank you. You're welcome. Thanks.
And for our viewers, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.